Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to talk about diversification once again, and give you a little bit of my take on it and my personal feelings around diversification. Because I do either get a comment in regards to that, especially to this portfolio, or just in general about diversification. And I think we have to understand something when it comes to that. But before we get into that, if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. So as we do, usually we will give you an update here on the portfolio. So as you can see here, the portfolio is closing out at $11,608.85 Canadian, down a whopping $109.71, down 0.94% for the day. For the 1 week, we are down $161.12, down 1.37%. For the 1 month, we are down $55.45, down 0.48%. For the 3 months, we are down $225.75, and it's starting to hurt. For the 1 year, we are only up 13.76%, up $1,404.57. And for the all, we are up 21.18%, up $2,028.85. So there is a lot of fluctuation happening, and we just seem to be going on a trend downwards. For the most part in this portfolio, we are down. In my other portfolios, we were kind of flat in most places. The only thing that was up in this portfolio was Qualcomm, up 73 cents, up 0.54%. We have $165.99 in the battle chest, getting ready to be deployed this Thursday, because Friday is Good Friday. So I do believe the markets are closed, so we'll be making our purchases on Thursday and not Friday. And so I want to talk about diversification. I got a comment in one of my previous videos in regards to not even suggesting that I need to diversify, but being told I need to diversify because I was too heavy in the financial sector. I just want to talk about that because when it comes to diversification, I get it. It's like this quote unquote rule of thumb where you just have to diversify. Diversification is such a general term in the financial world. It can mean having positions evenly across markets or across sectors, across asset classes. But no one really talks. They just throw the word out, diversification. You need to diversify more. And the reason I guess they said that is because I'm heavily invested in the bank sector. And I'm going to be honest, when it comes to that diversification, yes, there needs to be some sort of diversification, but I think that diversification is more applicable to your personal conviction in things. If you don't believe that a certain sector will continue to perform, then yeah, maybe you diversify into another sector, maybe energy, the energy sector, maybe not even that. Maybe you're a consumer staple kind of person and you have strong conviction over that. Or like the past 2 years, like everyone had a strong conviction in tech. And I guarantee you that most of those people only had tech stocks or were only exposed in the tech sector. But here's the thing. When it comes to investing, you can invest, let's say, in a company that is more on the consumer staple side, but has the tech element to it and is considered a tech company. But then you could also have a tech company that does payment processing, for example, like Square, Stripe, I believe is another one. These are typically companies that do business to business, B2B kind of business, yet they are processing payments and they are still considered a tech company. The other thing is Apple is a tech company as well, and so is Microsoft, but they don't deal with, well, they do kind of, but payment processing, I don't think Microsoft specializes in payment processing where you have a point of sale machine like Square, yet these company, or Block it is now called, but all these companies are considered tech stocks. but they are in different sectors of the tech industry. And so if you were invested in those kind of companies, would you say you have diversification or not? And that goes the same for banks or financial sector. Yeah, I may be heavy in the financial sector, but that's a sector I'm very confident in. That's a sector I'm very convicted in. I don't really understand the side of utilities, for example. When it comes to a utility company, I don't know how their company operates. I've never, well, I have a general idea, but I've never looked as deep as I have into financial companies instead, or like bank stocks or insurance companies, other than utility stocks. I have a more understanding of that sector, and so of course I'm going to invest where my knowledge is at and where I do have an understanding, and not just throw my cash into every single investment just to quote unquote have this diversification, this general diversification. I just want to really hit this home with this idea, and I could be completely wrong, but for me, another example would be real estate. Just because you own a home in residential zoning, I can't just go up to that person who owns a home and be like, why don't you I think you're just too heavy in the residential investing in real estate. I think you should probably get some commercial real estate. Or I don't go up to a person that has commercial real estate and has residential and be like, I was thinking about your portfolio, your diversification, and I think you should get into industrial zoning. You should get some industrial buildings, or you should get some commercial buildings in a strip mall area or things like that. I can't say that. You can, and that's pretty extreme, an extreme example when it comes to diversification. But honestly, let's really think about it. Just because we invest, let's say in North America, in Canada or in the US, and somebody wants to invest on the other side of the world, let's say Japan, for example, or Australia, or a place like China, for example. Nothing against them, but with everything going on, do you really have the confidence to invest in a place like China or like Europe? Would you have that confidence to do that? Some people do, some people don't. And so I think it comes down to really personalizing what your investment strategy is. I can't go and say, oh, you're too invested in tech stocks, you should probably think about maybe financial stocks. No, I can't do that. That's just not, I don't think that's fair. And so I'm not trying to take it personally, but I think I'm taking it personally, because the thing is, let's look at the S&P TSX 60, for example. If you're in Canada and that's what you invest in, it's an index fund. It's across all sectors, top 60 or 100 some companies. 30 to 33% of that index is made up of the financial sector. 30%. Would you say 30% is concentrated into just financials and not diversified enough? Are they supposed to split it evenly across the board? Does that make sense? So, and let's look at the S&P 500. 30 to 40, maybe even more than that, 40% of that is made up of tech stocks. Would you say that the S&P 500, which in fact has done on average 8 to 10% returns over however many years, is not diversified enough? It has all the sectors in there, but it's heavily weighted in the tech sector. So would it make sense to say, the S&P 500 needs to change its asset allocation because it's too heavy on the tech side, or go into the TSX 60 and say, it's very heavily concentrated in the financial sector. I think they should diversify it a bit more. I don't think so. I don't think that's fair. I think they've both performed pretty well, in my honest opinion. And full disclosure, I don't have the TSX 60 anywhere in my portfolio. I'm more of the S&P 500 kind of guy. And I'm okay with the asset allocation that is there. But again, I don't think diversification needs to be this quote unquote principle that everyone thinks that it should be distributed evenly, where it's, You know, you got to have 10% in tech, and that's it. You got to have 10% in consumer staples, and that's it. You got to have 10% in tech, and that's it. What happens? What happens if Canada in general doesn't have all the sectors that are inside the quote unquote financial definitions of each sector? So we know Canada has financial sector. We know it has energy sector, somewhat of a consumer staple sector, and so on and so forth. But what if they don't have a very big tech sector? Would you start investing in a tech sector in Canada just to say that you're diversified? I wouldn't, to be honest with you. And the reason I wouldn't is because I don't understand the company, and it's still in the growth phase. For example, I understand how banks operate. I understand how they make a profit. I understand the fundamentals of those companies, and that's what I'm gonna bet my chips on is the fact that I know they know what they're doing and have confidence in what they're doing. I don't just go invest willy-nilly just because I want some diversification in utilities or energy stocks. If you've noticed in this portfolio, there's no energy stocks, and there's a reason, personal reason, that I don't have energy stocks in this portfolio. Another thing is some investors don't like to invest in tobacco companies. Some investors don't like to invest in the energy sector or the oil and gas sector, and some don't like to invest in the defense sector. There's a reason why they don't invest in those sectors, and it's a personal reason. And it might come down to ESG, it might come down to their morals, it might come down to what their beliefs are. And so to say that somebody's too heavily invested in something, I think is an unfair statement. I think it's not really a really nice thing to say, just to look at someone's portfolio and be like, you know, I think you're too heavy in the financial sector. And I get it. It's your opinion, and you have every right to say it. And I could be completely wrong. 5, 10 years, 15 years from now, the financial sector could be totally wiped out. And I will sit here 5, 10, 15 years, and I will sit here and you know what I'll do? I guess I was wrong. I was completely wrong. But that's the great thing about investing. When you understand things and you go down the years of investing, you can start shifting the way you think. You can start shifting the way you're investing. Sorry, hit the mic there. That's my take on diversification. If someone tells you need to be diversified, ask them what that means. Ask them what they think that actually means, because they can say, oh, I think you should diversify your portfolio in different sectors. What about markets? There is a whole world out there of different markets. And would you say that you should invest in all of them just so that you can hedge your risk against different types of markets? Let's say, the US economy crashes and another economy, goes through the roof. Is it possible for you to invest there? Sometimes it's not. Like, for example, I think it was like last year, Mongolia had an amazing growth curve in their country, but you can't invest there. I haven't found a way that you can invest in companies there. For another example is South Korea. Is there a way that you can invest in South Korean companies? Maybe through indexes, but can you invest specifically there to capitalize on the growth there? Not necessarily directly. And so I think when people say you need to diversify more, if you're going to make that comment, I think you should give an explanation on why you think that is, and then compare it to what you think is the norm. Like, compare it to something. Give me a reason to really think that, yeah, maybe I should diversify. If it's the good old adage that you need to diversify just in case a sector drops, I don't think that's a valid point, to be honest with you, because I understand how, like I said, these sectors work, and I have confidence in them, and I have conviction in them, and I'm not gonna weigh that just because someone believes that I need to invest in another sector like utilities or energy sector or whatever it may be, or tech sector. I love tech, and I'm invested in the tech sector, and I would say the majority of all my portfolios put together, the majority of it is tech and a lot of financials. it's because those things I understand. I pay attention to those. I don't have time to pay attention to all the other sectors. And to be honest, that's what the S&P 500 is for. That's what the TSX 60 is for, to give you that somewhat of a diversification. But be aware that those are heavily weighted in certain areas, and they're not evenly diversified. And so that's my take on diversification. I know it's a longer video, a longer spiel, but it really got to me. And so other than that, guys, have a great week. Sorry for the longer video, and hopefully you did enjoy, and we'll see you in the next one. Bye.